is that? Technical.
Master of the universe, my trust is in you.
All right, so we are starting the new section. Please, can you help us to remove the songs, please, the background song. All right, so we are starting the discussion on new tax regime. You join me with a loud applause in celebrating our panel members and the following seasoned tax practitioners who have either been in practice or in the corridor of learning, teaching taxation will be the choosing member that will be anchoring this section. Please join me and with applause as we invite Dr. Oluyinka Isaiah Oluwagbade to the podium. Dr. Oluyinka Isaiah Oluwagbade is the immediate past head of the Department of Accounting of Abwad, and he's also the chairman of the local organizing committee of this international conference. Please celebrate our erudite doctor. I also have Dr. Ibitoye John Abiodun from NRS, Nigeria Revenue Service. He's a seasoned practitioner who will also be telling us the practical side of Ibitoye John Abiodun, NRS. All right, celebrate our erudite doctor, Dr. Ibitoye John Abiodun, as he comes forward. Also, we have Dr. Session Abayomi Ashubiojo. Please celebrate our deputy bossa. He's an erudite doctor, and he's also the one allowing us to keep maintaining our status as Abwad staff. Thank you, our deputy bossa, for constantly paying our salaries. And I also have the man that has been with us ever since this conference began, and he has made a very notable impact in the way of suggestions, contributions, and that is only one Mr. Oluniyi Omotosho from Mr. Oluniyi Omotosho, the managing partners, Chartered Accountants, Lagos. Please come forward. Come forward. We appreciate you. You have been so impactful. Your presence has been so noticed in this conference. We would love to see you from time and on and on. Then we also have Ambassador Oluwasegun Ogunsanya from Ekiti State Internal Revenue Service. If Ambassador, please, you are welcome to the podium. You're welcome. Please come up. Then Mr. Emmanuel O. Akinleye, CITN from Ekiti State Internal Revenue Service as well. You are welcome. Let's celebrate these iconic tax practitioners. So the section we are far ready to take you through the new tax regime. I would like to leave the stage for Dr. Oluyinka Isaiah to take us further on how the section will run.
Thank you so much, sir. The University Vice Chancellor and the entire management in absentia, the Provost, College of Social and Management Sciences in absentia, the Head of Department of Accounting, Dr. Adebola Jabbar, all the professors on ground, the fellow tax experts on the seats, distinguished postgraduate students, the pressmen, ladies and gentlemen. You are all welcome to this Nigeria Tax Reform Discourse. My name is Oluyinka Isaiah Oluwagbade. I'll quickly take us through an overview of the Nigeria tax reforms within very few minutes, after which we shall be welcoming questions from various areas on taxation, I have my amiable colleagues here who are prepared to provide insights to whatever questions may be bothering our mind. On social media, on various channels, there have been various questions that have been disturbing our mind about the new tax regime. And that's the essence of this meeting, to educate us and to provide information we can work with so that we can be properly guided in all our business and commercial activities. The Nigeria tax reforms was introduced, and it's called Nigeria Tax Act 2025, Nigeria Reform Act 2025, and the implementation started in January 2026. And these reforms is to make a significant shift in Nigerian tax system. Why this reform? The reform is necessary because the existing laws were fragmented. Before now, we have different law for company income tax. We have different one for personal income tax. We have CITA, PITA, value added tax, capital gain tax, and which allow for multiple taxation. But with the current tax law, which is Nigeria Tax Reform Act 2025, we have a single tax law which covers everything. And also, this law will allow more compliance on as what we experienced during the old tax regime. In addition to the Nigeria Tax Act 2025, we also have Nigeria Tax Administration Act 2025. We have Nigeria Revenue Service Act 2025, and we have Joint Revenue Board Act 2025. The core philosophy of reforms, number one, is a shift from identity-based taxation to activity-based taxation. In the old regime, the tax authority dealt more with identity. For instance, if you are an NGO or a religious organization, you are tax exempt. Thank you, because I'm trying to summarize everything. That's why I'm not waiting for the slide already prepared. I want to round it off my talk within just 15 minutes. Before now, if, as I said earlier, if you are a church organization or an NGO, you are tax exempt. It's identity based. But now, it is activity based. Even though if you are a church or a mosque, if you are running a business, like you have bookstore, you have schools, whatever business you are doing, that business aspect will be taxed. It's only your core activity that will not be taxed. For instance, your tithe and offering will not be taxed, but the money you make from the school or the bookstores will be subject to tax. Also, if you are an NGO, only your core activity will be exempted, but the donation will be spared, but the consultancy fees will be taxed. So the new regime is focusing more on activity rather than identity, and also focus more on fairness, efficiency, and transparency. I will talk more on personal income tax with the old regime and the new tax regime. The slide I prepared, I try to compare the old tax regime with the new tax regime. And for personal income tax for payee, who is collecting salary alone without any additional income. Then there is a slight difference that your tax liability under the new tax regime is lower than your tax. Okay, thank you. Liability under the new regime. The new tax regime make it easier for low income earners to pay less tax. For instance, for your 5 million naira. And if you claim that you pay up to that, the tax authority will have to trace it down to the landlord who will receive the money and collect the withholding tax. So there's no hiding place. You cannot hide. And if you are a landlord of your own house, you cannot claim this relief because it is document based. You must provide documents that truly you pay this kind of amount. And the second scenario I provided is when some income earner has some other activities, like you go for consultancies and you earn income. Your income is subject to tax, but your expenses will be deducted from it. The fear that every income that comes to my account will be taxed, it is not true. It is not all inflow that are income. It is only your income that after the allowable expenses that are subject to tax. Somebody told me that he is a coordinator of a cooperative friendly contributions, and that every month they gather money in his hands. That what will happen, because once he enter his phone number and NIN, all the money will come up. I said, that one, it's not income. You as a money agent, you are under the fiduciary capacity to collect such money. Such money is tax exempt. It is not your income. So, when we see this, and another thing that make the new tax regime now to be somehow more expensive than other is the issue of capital gain tax. In the old tax law, the capital gain tax is taxed, the capital gain was taxed separately at 10%. But under the new regime, it is incorporated into the main income and subjected to 30% company income tax. And if it's an individual, instead of, because the government did that to make it difficult for people to evade or avoid tax. What some companies used to do is that if my normal income is 2 million, and I know if I can make 1 million to be capital gain, I will only pay 10% on capital gain on 1 million and pay 30% on the remaining 30 or on the remaining 1 million. But now it is no longer possible. The entire 2 million income, taxable income, will be subjected to tax. So there is no hiding place that you want to use one as a capital gain or the other. The last one also I would like to talk on is the pioneer status. Before, if you claim to be under pioneer status, you can enjoy the relief and pay zero tax from 3 to 5 years. It is identity based. But now, the new law says that you will only be given the 5% tax credit of your capital investments. So it is activity based, not just identity based. If you do something that warrant such to get any tax credit, you will definitely be given. There are many things I would like to say here, but because of the time, and that's why I cannot even follow the slide that I have prepared. I know there are many questions that will be bothering our mind, which we have been asking us on WhatsApp platform and on other several social media. So our tax experts are here who will help us answer such questions and practically tell us what we can do to pay a lesser tax.
Signify if you have questions. Then if you cannot, you can also put it down so that we can read it out. If you are you have phobia for facing the crowd, so you can also do that. So let's recognize our Afe professor, the head of the Department of Accounting, University of Ilesha. Thank you very much, sir.
Thank you so much. I want to appreciate our erudite scholar, the Dr. Oluwagbade, for that wonderful presentation. But mine is more of contribution than question that can help the audience. I think from the analysis of the new tax regime, I want to classify it from the perspective of documentation tax regime. It is less of saying the money in your account is not yours, so the taxman will overlook it. Even prior to this regime, new tax regime, there were times a number in which the anti-corruption agency collaborated with the FRS of then to visit some selected companies, and they will come up with additional taxes. You know, the funniest thing, they will put a lien of the account of that company. It is assumed that every money that enters your account is your money until it is proved otherwise. So the onion is on you as a taxpayer to prove that the money that came into your account is not your money. The only way to prove is documentation. That's why I call it documentation tax your money. It will be taxed. So that is my own contribution to encourage people to do more in terms of explanations about what enter. In fact, accountants should be eating more now, because it is not just of bringing statement. It's about doing proper classifications, preparing this goes to this. If you can prove that, the taxman will free you. Thank you.
Please celebrate our erudite doctor, Afe Professor Israel Akindewo, for that laudable contribution. Thank you. Yeah, okay. Our Afe Professor Olushola Ibitoyi is also available to give us a question or a contribution.
Thanks so much, sir. This discussion is coming at the right time when the whole Nigeria is, having a kind of concern about the new tax regime, as it has been actually been presented by our erudite professor. Thanks so much, sir. I have two questions. The first one is a kind of follow-up to the question raised by our bishop. It is assumed that everything that comes to account belongs to you. And the onus is on the owner of the account to be able to, there is a significant, emphasis on the issue of narration. That when money comes to into your account, it's come with a narration. Then when the part of the population that are not literate, the man or the woman selling tomato in the market, who is not literate, but who can use the phone very well. How does the issue of a proper narration comes in as to be able to explain the inflow and outflow about this account? That's number one. Why have I said that? You as a person, you are engaged in two particular activities. One, you have a business. You have a business of your own. Two, you are of your own. Two, you are on a paid job. One is personal to you. Two, you are working for salary. We'll be told that those on a business activity must, you must file a return for that. Then secondly, on your paid job too. individual is being asked to do a filing. Where is the position of the employee in the filing? Should the filing be done by individual? Should the filing be done by individual or by the employee of that individual? Who does the filing? Thank you so much, sir.
Thank you for that question. Thank you for that question.
Thank you so much, sir. Thank you so much, sir. For all aspects of the questions can be handled by the people here, and I've told the people who to handle each. So, dear colleagues, once you hear your question, just quickly attend to it.
Yeah, thank you very much, Mr. Moderator. I will start from the question of. I will start from the question of. Okay, sir. All right, thank you. I would like to answer a question, Doctor. I would like to answer a question, Dr. Ibitoye. There are two questions or three questions in one. But I will start from the rear. The double taxation, I don't know what you mean by double taxation, but let me start from. Individual states cannot design the modus. Individual states cannot design the modus the way they want to the filings to be. It could be a manual process like we used to do before. It could be an online. So the corporate organization has to file the returns of their employees on what they pay them on monthly basis. Number two, that same law, that old law also empower the individual to file their returns, because it is assumed that an individual might have other side hustles in which taxes are not being remitted. Not only the issue of taxes not being remitted, not only the issue of taxes. For you to, when we are talking about assessment, the taxpayers on his own have to present his own income. This is my income for the 12 months calendar. We are talking in arrears now.
On behalf of the employee is not expected to file any other returns. While the self-employed individual file their own returns separately. So now, because the law is talking about worldwide income, which is gross income now, after the employer has filed the employer's annual returns, which is for payee, like for instance now, a staff of ABWAD is expected that ABWAD as an institution will have filed the responsibility. Failure to file the employer's income, the penalty lies on the organization. Then now, that is within January 1 and 31st of January. Then for individual, then after the organization has filed on your behalf, it is expected you file your own individual annual returns. Now, how you now file your individual annual return, this is how it goes. They have a laid down guideline being set aside by the Joint Revenue Board. You have your employment income. So if you don't have any side hustle, any side business, you are not a freelancer, your income is solely dependent on outward employment income. So you just go to the individual portal, you file your income, which is, you will state it there. So that will be deducted. So it's the balance that will now be what is outstanding. Then another situation that arises again is that if you are into rental income, then withholding tax has been deducted prior that particular period. Because has been done that particular period, then what you need to do is that if you are into any organization or any deduction that attracts withholding tax, please don't just confirm that it has been deducted. Ensure you collect a credit note in respect to that particular withholding tax, because withholding tax is not a tax per se. is an advance payment of income tax. So the credit note you have collected now, that one you are going to use to reduce your tax liability. That's your personal income tax liability. So it's not double taxation per se. So your employment income will not be taxed again. You will remove what has been taxed in terms of your pay. So it's the balance that you are going to pay. Thank you.
Thank you so much. Okay, sir.
I want to add a point. Dr. Ibitoye mentioned a woman selling tomatoes, something like that. So that's where I'm coming from. Now, somebody that is selling something like that, like Section 28 of the NTA, talks about what we call presumptive tax, which is mainly aim of bringing in the informal sector to the tax net. And what they mean by presumptive tax is that they will just look at people that belongs to the same category of business, though they don't have record, because they are not keeping record. They can just assume that, okay, these people probably monthly they are making 100,000. So they now look at it, they now tax them based on that. Then you now, yes, presumptive tax. Now the assessment will be normal. It's not something that will be abnormal. Something that will cost across. Not that now you mentioned it the other time now, saying that somebody that is selling tomato now, then probably he or she is receiving some money that is coming from somewhere. If you can explain it, but I doubt it. If somebody that is selling tomato, you have 100 million in his account, and you are saying that probably it's a gift from a brother or something like that, tax authority will not accept your explanation, because such explanation too has to be reasonable, something that they can believe that you can prove. So that is that. Then you also talk about the filing. Even though my brother here has explained that, then that depends if it is not a registered company. Let me come from that now. One good thing that this new tax law also achieves is that to remove the veil from corporate directors. You know, in those days, I could remember when we were in the school, we were taught that business is a separate entity, that the owners, the business is, you can be.
So what can I do as an employee to reduce my tax liability? Is there no other option of what I can do to pay lesser tax? You help me address that one after Dr. Asubiuju's thank you.
Thank you, sir. Before now, the old tax regime, under Section 23, subsection 1C of Company Income Tax Act, into ecclesiastical and charitable organizations. And such, the profits or surplus, so to say, considering their status of incorporation, either limited by guarantee or by
It's not the issue of other, like let's say they spend money on books, on library, on research, and all those ones. Those ones are allowed, they won't tax those ones. But the final profit is what they are now saying. So I believe that in their knowledge, they are just saying that they should take more from those people. Thank you.
Thank you so much, sir.
Maybe I should clarify further. We understand that these organizations, when they run businesses that are profit-oriented, for example, use Abwad as a case study. We have ventures, we have water plants and the likes, that they could be making profit if they're actually making profit. We know that those ones are subject to company income tax, as it is expected. But what we are saying is, when we say a company or an institution is limited by guarantee, by their status of incorporation, means globally, that is the best practice everywhere in the world. You are not supposed, because you are not even actually declaring profits. You prepare income and expenditure account, so you are declaring a surplus or a deficit. If a company is limited by guarantee, it means every surplus in the organization is replowed back into the system. That means no one has any right, no one has any shares. whoever, even if the proprietor is taking any money, the tax work can go to the such person and claim personal income tax from such a person, instead of saying such an organization should pay tax. That's the point.
Remain during the public hearing, maybe those concerned will definitely listen and change the position. But the position of the law, presently, as Director has rightly said, it is that everyone that earns income is taxable, except the law says you are tax exempt. More especially, like for instance, now, anyone earning national minimum wage and below, they are exempted from payee. Not that they are not taxable person, they are taxable person, but their salary from employment is exempted from payee. So if you earn other income outside your employment income, that is also taxable. That's one of the basis for allowing, apart from your organization filing on your behalf, you should go and file on your own personal income. Thank you.
Thank you so much, sir. Mr. Oluniyi.
Yeah. Good afternoon, sir. Based on my experience, the NGO education, it depends on the nature how they register. If they register as a guarantee, limited by guarantee, or as a business name, they are exempted, completely exempted for income tax. But if they are doing any business that is not in line with the object clause of the business, maybe they are giving loan, they are not banker, or they are selling and buying, they are deviated from the object, they will pay tax on that aspect. It means that the auditor will not prepare addendum or account statement that will attach with the audited account that will show that, oh, this is the additional business they are doing. Like oil and gas was created for cleansing of the oil split in the river, and they created by the limited by guarantee. Then when they come, anytime the FRA come or state come, they will look about the addendum account that we do to tax them on, because at times they fix the income, they tax that aspect. Like the case of the Covenant University that I was a party to, when they took them to court.
Tax promans will soon be changed very soon. We are coming up with another platform in the next 1 month, and I believe all those ones will be taken care of.
Thank you so much, sir. Tax promans will soon be changed. That's from somebody from Federal Inland Revenue Service. That for now NRS, Nigeria Revenue Service now. In this panel, we have experts from various organizations. So they are attending to all our questions adequately. Before I ask them any question from here, do I still have any other question from the audience? Plenty questions. Have you documented them? You help me read them out so that we can. Let's take all the questions for now, and let's document them down. Then we'll be providing answers one after the other. Okay, ask your questions, Prof.
Okay. All right, thank you very much. I want to sincerely appreciate our erudite scholar, Professor Oluwagbade, for that wonderful presentation. You know, it's not everybody that can do what you have just done. Now, you are able to summarize the entire tax act in 15 minutes. So that is highly commendable. So I pray the Lord will continue to renew your strength. Okay, thank you. So I also want to appreciate the department and the university for this kind of presentation and this innovation. You see, this is what I think the government should be doing. You know, before we moved to 2026, there was a lot of tension in the air. Any money you have in your bank will be taxed, and a lot of propaganda about this new tax act. And at that time, I expected that maybe agencies like NOAA, National Orientation Agency, will come to the public to sensitize and give people orientation. So, but I'm not sure they did so much. I didn't want to say they didn't do that. So, that the university is coming up, because what you are doing is sensitization, and you are informing the public. So, it's just my sincere hope that this will go to the media, so that the public will be more enlightened. So, I want to appreciate the university for that. Now, I want to come to my comment or my question. You know, when you look at this tax law, it's all encompassing. And if you have had the opportunity of interacting with the section, you know that it's a very good policy at a time like this. And it's in line with the, global practices. Because in most of the developed economy, you widen the tax net such that you increase the government revenue. And I think that is what this tax law has done. You reduce the liability, especially for the downtrodden, the people who are earning less, and you focus on the high income earner in the society. So that is the essence of progressive, tax system. But as good as this policy is, and this is my question now, Nigeria, we are good at making policies, but implementation. And I want to ask, as good as these policies, what are the measures that have been put in place to ensure that the purpose is achieved? Now, let me stress further. In Nigeria, there are so many policies. When you go to the police, they will say, police is your friend, bail is free. But until you have issue with the police and you now go to the police station, that is where you will know how friendship the police could be, whether truly they are your friend. And you will know whether bail is actually free. Now, we have policy on... Sorry, we have policy on immigration. You want to get a passport. You go online, you see a price. When you get to the immigration office, it's another price entirely. And the government will say, don't pay to anybody. But by the time you go there, and in 6 months, you are still going to the immigration office, then you'll be compelled to actually now do their bidding. Also, you want to renew a license. They will say, this thing you can do online. Go online, just pay online. I have a friend who paid for a license 3 years. He did not capture until the license expired for the 3 years. So these are policies that government we have put in place just to ensure that we have a better system. But at implementation and human being what we are, so you discover that we have a way of circumventing it. So with this one now, what are the measures that government have put in place such that whatever we are paying now as tax revenue is now going directly? We all know what operates, especially at federal inland revenue, state inland revenue, so that they slam you with a liability, 500 million. And you go there, you negotiate with them, they say, okay, pay 70 to the government, give us 50 million, then your liability is clear. And later you discover that, formerly you'll be thinking of what if they do back duty assessment, but all those things are not done again, so people just do it and get away with it. And at the end of the day, you'll be wondering what the government has actually achieved. So in summary, my question is, what are the measures that have been put in place and at the level of the federal inland revenue to ensure that this policy is fully implemented and the aim is achieved? Thank you.
Thank you so much, Professor Yoruba, the HOD accounting from Bowen University. This program is being live streamed, and we have 5 media houses that are covering it. Mainstream media and many other media houses are covering this event. And there will be a communique after this, which will be communicated are to the top as the outcome of this discourse. So I would like, please let me take some other questions and let us address them together, because after now we still have another breakup session. And let me announce that the virtual participants who also have questions, so please indicate. Okay. Who's answering? Okay. Why you do that one? Why you do that one? Let me quickly answer his question. NRS. Okay. Yes. NRS.
Thank you, sir. That question, sir, it seems is to be, I don't know, mayor put in place to achieve. Okay, to just answer generally like that, the mayor put in place is Nigeria Revenue Service. We are following the law. We are implementing the law as our own capacity, as the law has given us the power. So I believe the mayor put in place is the service that they are doing their work. If you have any problem with any section of the law, you can come to the office. You can contact FRS. He will attend to your problems. I don't know, probably if there is any specific area you want us to now, probably the mayor put it for collection, for tracking, or for something like that. I don't know, but if it's generally, I believe that FRS have been equipped and they are doing their work to make sure that they implement the law accordingly.
Thank you, sir. I want to talk about even the current law. The current law has abolished cash collection in revenue administration. That's one of the key measures put in place. Cash collection, that is one. And all state internal revenue service have been mandated to digitalize payment. So the use of technology, one, will eradicate or reduce to the barest minimum any suspected fraud in revenue collection. That is one area. The other area again is that for, let me say for instance now, Ekiti Internal Revenue Service, when you go to the portal of Ekiti Internal Revenue Service, we have a what you call whistle-blowing portal, where you can get the phone number of the executive chairman or some other direct line where you can lodge complaint, even emails that you can lodge complaint where you feel cheated in respect to that. Then one key area I want us to also look at again for the taxpayer as individual and organization. Compliance is key in this new tax law. You might look at it that, yes, for instance now, you have, let me say, your tax liability, sometime before now, you will see some organization that deliberately deduct correctly, but they won't remit correctly, either in terms of pay, withholding tax, or other things. What they will do is that, okay, let us reserve some for PR. So while waiting for that particular organization, the particular officer that came in for your exercise that you said to at that particular point will not remain in service forever. And the law give room for what you call back duty. So let me come in, sir. The law stated back duty.
And this
back
is my
duty
question.
In the sense that
Nigeria,
6 years, the tax authority, either the NRS or the State Internal Revenue Service, can carry out tax audit exercise for 6 years. Then in the current law, it's also stated that if suspected fraud is established, or deliberate will that you try to depress document or law, the tax authority can go, the carry out investigation can go even beyond 6 years. So why can't you do the right thing just to avoid that particular issue. And the disadvantage is that any bad duty that is carried out, you are paying more. Paying more in the sense that penalty will be established. Interest will be established at prevailing CBN monetary policy rate. So you have to pay more. So the best thing in this new era is compliance. Thank you.
So much, sir. Sorry. Let me quickly read out some questions. This question says, there is a difference, or maybe just asking that, is there a difference between fining and paying tax? I need an explanation between the two. The man who's collecting our money state. Mr. Akinleye. Number 2, based on the new tax law, we were told that the new tax law will have a positive effect on our net pay. But at the end of the day, there is no significant change. What could be the logic behind it? Hope the 2 questions are noted. The next one says, I spend my first day in the year in my country hometown in Ondo State, but spend above 180 days in the Ekiti State. Please, where should my tax be paid to? How do I remit, the next one, how do I remit my tax payment to my state, which is Ondo State? Then, what is the justification in law for the arbitrary taxes imposed on non-residents or anyone in need of tax clearance certificates? Then, when is TIN going to be harmonized? I can observe that states are still using different things. TIN. Okay. I think that's it for now. Let me add this. I'm a student. I'm not working, but my pocket money is above minimum wage. Am I supposed to pay tax? Thank you. So who's answering? Okay.
Yeah, please. Permit me to take us back. I'm glad that the people from the tax office, both the Federal Inland Revenue Service and the State Board of Internal Revenue, are actually been able to answer questions, and they have likened their response to compliance. I'm going back to the question of Prof. The tax authority or the government are actually shying away from voluntary compliance or things that can make people comply voluntarily. We all know in this part of the world that collecting money or making people pay tax is difficult. What is happening to accountability of tax collected? If these boards or the government are actually accountable, I believe people will want to pay more. Why? Because there will be transparency. Where there is transparency, there will be trust built. People will have trust in the government. What are they showing to the citizen as regards what they have used taxpayers' money to do? I think as much as they are looking at it from the point of compliance, scaring us with penalties, jail terms, and the likes, we should look at it from the angle of what can we do the physical exchange theory, the social welfare theory. Where did they throw this? Then, are there penalties for public office holders that misuse taxpayers' money? These are things that we should look at. If I know that my state governor will be penalized or punished for misusing my hard-earned money that I have collected, I think he will think twice before misusing it. These are things I think we should look at beyond compliance. Thank you.
Sorry, this is the man who has been collecting our money from Abuad. So let's quickly answer.
Thank you very much, sir. I don't know whether one of the panelists is permitted to ask questions as well. Well, the question that I will quickly react to Prof from the Bowen. Basically, the mayor put in place as regards to the new tax reform is digitalization. From the point of registration to the last exercise has been said by my colleagues the other time. Digitalization is very, very difficult for one to mutilate papers with this new tax reform. So, and in Ekiti State, I can attest to the fact that that is being done, apart from the whistleblowing windows that is open to the taxpayers. Now, to the question that concerns me, there was a question different between filing and payment of taxes. Filings, as I said the other time, is one of the primary responsibility of taxpayers. How do we know your status? How do we know your income? You have to tell the relevant tax authority by filing your returns. It is now left for the tax authority to now review what you have filed, whether you up to the tax threshold or not. You are not the one that will determine, no, for the fact that my employer is not paying up to 800,000 or thereabout, I must not pay taxes. So file your returns for tax authority to review. Then another question is, I spent the first day in my Ondo State. Ondo State, yeah.
I spent above 180 days in Ekiti State.
All right. All right. So far you spent up to 183 days. That's the residency rule. If you spend up to 183 days, you are to file your returns in Ekiti State or in the state which you spend the 183 days. I will quickly I will allow my peers to answer other questions, but let me quickly rush down to the question of Dr. Asubiojo. Dr. Asubiojo, to tax and to please is not given to any man. And the mandate given to tax authority are just three basic things. We are to assess, collect, and remit. Thank you very much. What they do with the money, we don't know. Thank you, sir.
I want to say something on the issue of filing and paying. There's a big difference between filing and paying. When for companies or individuals that are exempted from paying tax, they may not pay, but filing is for everybody. Take for example now, for company income tax, in the new law says, when your turnover is less than 50 million, you are exempted from paying company income tax. But at the same time, you have to file. Filing is compulsory. So if you are not filing, the penalty for not filing is 100,000 for the first month. Then the subsequent month is 50,000. So it doesn't matter even if you are making zero income. you have to file. So filing is for everybody, while paying is not for everybody. So let me say that. Then the issue of the TCC, like in FRS now, we have what we call automated TCC now. That the moment you just enter your information, your profile, the system will generate your TCC automatically. It's not that anybody will now be writing it for you. So if you put it there, your thing, your payment, and all the rest, the TCC now is automatic. Not that you'll be begging anybody to collect it. Then the issue of the mayor put in place the other time, I believe, let me say this one too, there are two things that are very important. Just as my colleagues here said, talk about digitalization, which is the real thing. Then the other thing is the unification of the all numbers, the TIN, the BVN, the NIM, and the rest. So there is a process. The new tax law now saying now that we are having one number for tax ID. Your NIM, your BVN, your CAC, if it's company and all the rest, a number is now coming for everybody that will be used as your tax ID, which is for everybody. Then there is something we call now, even though that one we have started with Lag Tax Office, we call it EFS. That is electronic physical system. And what does that mean? It's now talking about having the transaction in the real time with FRS. As I said, it has started with Lag Tax Company. That is company that has turnover that is above 5 billion. Starting from 1st of January, all their transactions, especially the VAT transaction, they cannot just issue receipts, PDF receipts or ordinary receipts to their customers. The receipt will first come to FRS portal. From FRS portal, that's what we call QR code that will be given, and another stamp that will be given to that receipt before going out to the customers. And without that stamps and the FRS QR code, the receipt is illegal. So that means that customer cannot claim the input VAT. He can't claim the input VAT like we told him that, okay, this is it. Now we have started that with, FRS have started that, we have started that with Lag Tax. Then by July this year, the company between 1 to 5 billion too, their own will start. Then by 1st of January 2027, the enforcement will start. Because that, for that of Lag Tax now, started 1st July 2025. Why the enforcement started January this year. Then for the medium, which is 1 billion to 5 billion, it will start by July this year. Why the enforcement will start by January next year. Then for other companies below 1 billion, their own will start by July 2027. And the enforcement will be the following year, January. And you know, any company that fails to do it, the penalty to it, just as my brother yesterday said, no, it's 10 million naira. And I believe no company wants to get that fine. So that means, as the thing is happening now, FRS will be seeing it, there won't be hiding place. Company can now report low income, and nobody cannot just come that, okay, they manipulate their income at the end of the day. So those are some of the measures that has been put in place. Thank you.
So much, sir. So we have heard from Nigeria Revenue Service. He has given us great insights into those questions. Is it part of which of the questions is that? So because
okay. Okay, sir. Okay. Yeah, and I want to make reference to two questions. One of the questions raised, we have why is state still using the Ekiti? Why we have state are still using the Ekiti? We have even the federal are still using some of the TIN, which is tax identification number. Presently, we have what they call national tax ID. And I want us to, if we have not registered, please you should go and register. Check section 4 of Nigerian Tax Act. And where the first penalty comes in is failure to register. Under section 100 of Nigerian Tax Administration Act, we have failure to register for Nigerian Tax ID. So Nigerian Tax ID now, we now harmonize, just to answer the question, we now harmonize all the states. Like now, if you pay in Ekiti State, you have Ekiti State Tax Identification Number. Go to Ondo, Ondo State Tax Identification Number. Lagos, Lagos Tax Identification Number. Federal, you have either Tax Identification Number or JTBT or thereabout. But now, the issue of tax, National Tax ID is being handled majorly by the Joint Revenue Board in conjunction with Nigerian Revenue Service. So now they will now harmonize. There's a process of harmonizing all the state tax identification number, so that they will harmonize it. They will link everything to the tax ID. So I'm only appealing to us now. Let us go and register for our national tax ID. Everyone that is having national identification number, tax ID has been generated automatically for us. What we just need to do is that there's a link. The link will be dropped with the moderator. Was just enter your NIN number. You have to just retrieve your national tax ID. But failure to register as a taxable person for the first month is 25,000 naira for failure to register, and there's penalty for subsequent months. So let us go and register for it and retrieve our national tax ID. And the benefit of national tax ID is that irrespective of your tax payment, either in federal, state, or irrespective of the state, your payment will be linked to that tax ID, so that there won't be issue of you are paying personal income tax in Ekiti State. You want to go and carry out another service that require tax certification, tax clearance certificate, then they will not charge you again in Ondo State or that nature. With your national tax ID, it will bring out your history of your tax remittances. That is usual on that. Then, as issue was also asked on tax clearance certificate. On issue of tax clearance certificate, it is stated by law. If you check section 85 of personal income tax, you will see it there, even more. In the current tax reform, it has been reduced. Tax certification, tax clearance certificate, that you are not paying for tax clearance certificate, we should just let us clear that. Tax clearance certificate, you are not paying for tax clearance certificate, either for federal or state. Tax clearance certificate is just a certificate to affirm your compliance to tax payment. If your tax deduction is carried out, if you are underpaid employment, what you just need to do after filing of returns, your institution, your organization should just write to State Internal Revenue Service requesting for your tax clearance certificate. You are not making any payment in respect to that. But if you want to collect tax clearance certificate now, maybe you need it for a particular service. So now the tax authority don't just give you tax clearance certificate because you have applied or you have paid tax. They will compute your tax income, which is your income for 3 relevant years. So if you don't have any under deduction, tax clearance certificate will be issued to you. So if you now have under deduction, so the tax authority will now let you know this is your under deduction. After the payment of your under deduction, that's when your tax clearance certificate will be issued to you. Not that you are paying for tax clearance certificate. Thank you.
I need to add to that. Briefly. 1 minute. All right, sir. Thank you, sir. Just to add to what my colleague just said on the issue of a tax clearance certificate, because Abwad people has been my customer in that regards. So let me quickly explain. Why we have a issue of a shortfall is when we have under remittances. When we have under remittances, the tax authority will look at it, your income, because for individual that apply for tax clearance certificate, the service has made a system that if your organization or your school did not request on your behalf, as individual you can also request because of the urgency you might have. So if you approach the tax authority for your individual tax clearance certificate, and we give you a form, there is a form, blank form that will give to you. You are the one that will compute that form on your own side. When you give it to us, you are not giving it to us for us just to write. You have to review it as well in line with your payslip and other documents submitted to us in the past 3 years. You will find any shortfall or any differential, we will let you know. All you need to do is to go back to your office. This is what the tax authority gives to me. How come about this? You can now resolve that one. Or if it's so urgent at your own part, you can foot the bill. Thank you, sir.
Thank you so much, sir, for the insight. Before I ask Mr. Lunu Yomoto his own question, the person who asked some of these questions is not satisfied with the answer. So you want to seek more clarification based on practical case. So let me give my colleague, Dr. Otomelusi, to provide further information on his question.
All right, thank you very much, sir. I'm a taxpayer in Ekiti State, but I'm a native of Ondo State. So I pay my taxes to ICAGSD. Now I went to Ondo State. I also have a business in Ondo State that pays tax to ODIRS. Now I went there to collect tax clearance certificate, and I was asked to pay 500,000 naira before I can get it. And I asked, on what basis? That the only source of income here has been taxed. Then why that tax clearance again? That would that not amount to double taxation? So, but they insisted that is the way. That if I don't have it, no TCC. Now a friend of mine who resides abroad needed that TCC again. He made no income here. He has no business unit here. And they asked him to pay 1.5 million naira. And until he paid. On what basis? Which income are you taxing? They said, Oga. I said, is this not illegal? They said, is there anything legality in Nigeria? That was the message I got from the tax official. That tell me one thing that is legal in Nigeria. That Oga, if you are not paying. And I went out from that office, demoralized. So, and another issue, I mean, it took you a lot of time before you implemented this law. We have been planning this law for more than 2 years. Now, and you said that this law will take effect from 1st January 2026. Today, you have not harmonized the tax identification number of all the taxpayers. I have different things in Ondo State. I have another one in Ekiti. The national one you are talking, I have it. So when? And then you very soon now you'll be driving taxpayer for non-compliance, whereas the one you yourself promised to implement, you have not done it, even in the month of April. Even in the month of April, 4 months after, and you want compliance for filing in 31 days, January 31 and April 30. How is that practicable? The problem we have is we are the policy makers are the first violators of all the laws they make. So that is that about that. So my question now is harmonizing. And two, what is the basis of all these arbitrary charges? When are we going to get away with this? You can't get TCC, especially when you need it to consummate another business or activity. When they know that you are desperately in need of it, and they pin you to the wall and make sure you pay out of your nose. So this is my question, please. How do we resolve all these challenges?
Sir, hello, sir. I still want to be with the mic, sir.
All right, sir.
I love when taxpayers come in with practical questions. We are called practitioners here. I want to be practical. Sir, for the year 2025, do you file your annual return, sir?
Yes, sir.
File your return to which state?
Ondo State.
Ondo State.
Yes, sir.
What about to Ekiti State, sir?
I've not registered for the Ekiti. Though we...
No, because I want us to be practical. I want to be practical. You said you pay to Ekiti State, you get tax clearance.
I pay my payee to Ekiti State.
Sir.
But I needed tax clearance in Ondo State.
Ondo State, yes. That's what I want to clear, sir. One, we have two issues here. In Ekiti State, you pay your payee to Ekiti State. which is under employment income. Then in Ondo State, you say you have another business. It's additional. It's another income separately.
Yes.
Quite different from your employment income.
And I've paid the tax for that.
If you pay the tax for that, then definitely what Ondo State will charge you is based on your filing. And when they carry out their activities, you definitely pay 2 tax. Because one, you are working in Ekiti State.
Sir, you are not addressing my question.
Hold on, sir.
All right.
Hold on, sir. You have 2 issues now. In Ekiti State, you can, when you file your returns.
Employment income.
Sir, hold on, sir. You are not getting there. There are some things we need to get right. Excuse me, sir. I understand what I'm saying. Tax clearance certificate, if you earn tax clearance certificate by Nigerian law, it is for 3 preceding year. 3 preceding year. Let us get it clearly. If you have paid for 2025, you have a receipt for that. Then if you need tax clearance certificate, they will tax you, they will ask you your 3 years history. 3-year history. If you have your business, unless you can prove to them that for 2024 and 2023, your business is not existing.
I proved to them, I gave them my certificate of registration, which was registered in 2025.
Yes, sir.
That based on this certificate, I just commenced this business. Tax me based on the business, the income I made within this period. And they did that. And I said, please, can you avail me my TCC? They said no. But that one that I will need to pay 500,000 naira. And my friend that we went together, who came from abroad,
yes,
without any business in Nigeria, they taxed him 1.5 million naira.
Okay, that is a system. That is a system failure in that respect. That is a system failure in that respect. That is a system failure in that particular respect. I must admit that. That is a system failure. Hold on, sir. Hold on, sir. Hold on, sir. That is a system failure in that particular respect. Then, as a taxpayer too, you also have a right to object. The taxpayer right is that, hold on, sir. The taxpayer right is that if you are given an assessment, collect that assessment, you have the right to object it within 30 days. State your ground of objection. State your ground of objection. For somebody that live in diaspora, you only tax a resident person. That is what the law says. You tax a resident person, individual. But somebody that live in a diaspora, what we ask for is that if you live in diaspora, provide us evidence of your income filing in that particular country. If you provide it and you don't have any source of, we cannot link any business or source of income to you in Nigeria, it's not applicable, you pass in Nigeria.
And how will that person get TCC? Because he needs TCC to consummate a business.
No, we have exemption note. We have exemptions. Right. There's exemptions note if you have that particular income, and you can even ask to pay just development levy. Okay. With development levy, your transaction can be carried out. Right. That's fine now.
Okay, thank you very much. This is the theoretical part, but when we get to the field, we see different things. Thank you very much, sir.
Do I even need to? Okay, sir. Can I just say something on that? Sir, excuse me, sir. Please, sir. The business you have in Ondo State, sir, is it a registered company? You can get tax clearance for that business, not you individually. No, they can't. No. That one, that's not the fault of the law. The business you have in Ondo State, you can get tax clearance for that. While you working here in Ekiti State, you can get your personal tax clearance here. The two are not the same. No, it says it's a registered company. No, it says it's a registered company.
Hello.
One house, please.
It's a registered
Decorum,
business,
please.
not a limited liability company.
Decorum. Decorum, please. We still have other issues to attend. I will give the head of payee in the Ekiti State National Revenue Service, Mr. Kineye, to add his contribution before we move to the next question.
Thank you for the opportunity, sir. Sir, on your own issues in Ondo State, Adebi, you file your returns stating that you have a business. If you file your returns in Ekiti State, for instance, and you stated that you have another business in Ondo State, why your employer is Abuad, the tax land certificate will be EU here in the Ekiti State. All we need to do is to get that your income, then consummate it, and tell you what you're supposed to pay on that income. Are we together, sir? But if you now fail, and that's why we are always advocating that let's try to file our returns. It's very, and when we are filing our returns, we are filing the global income. It has been said here several times, let's file our global income. To Ondo State, they did see you as an employer of Abuad. You have been seen as a taxpayer in Ondo State. Adebi, you've informed them that I'll file my returns in Ekiti State, and this is the tax clearance certificate being issued to me. No state will reject that tax clearance certificate. On issue of your friends, sir, I don't know what transaction they want to do, but so far he has an economic presence in Ekiti State. We will tax. I mean, is it in Ondo State? The person in abroad.
Title document, so they ask for this TCC.
He has a land in Ondo State, wherever the land might be, it has value. That means it has economic presence.
Yes, the land is just bought within that same week. He came from abroad to buy the land.
Okay.
And just to get
the way we treat
document.
The way we treat it in Ekiti State is that we ask for your tax history from where you are abroad. So the moment you are able to provide that, all we need to ask is development levy. We have been doing it to several taxpayers, and we have evidence across both in that regards. Thank you, sir.
Sorry, sir. In addition, what this Brooklyn or this conversation was that they asked me where do I spend my first day in the year, and I asked them in Ondo State. They said my tax is supposed to be. So I don't know how that one is.
No, sir. No, sir. You know, I said something the other time that the residency rule states that you have to spend 183 days in a particular area before you can remit your taxes. And Ekiti State is your principal place of residence. So in that regard, 3 days, or maybe you are coming from Ondo State every day, and you reside in Ondo State.
For your great contributions. I would like to ask Mr. Motors of the question that concerns many of us. Many of us here are employees without even any additional income anywhere. Sir, what can I do to make sure that my tax liability is reduced? Then, is it possible, is there any loophole for my organization to negotiate with tax authority and pay lesser tax? Do we still have room for negotiation? Or there are things I can claim on myself that can make me pay lesser tax? Thank you, sir.
Well done, sir. So before I answer the question, I want to clarify some issue on the state and the federal. There are a lot of issues in practice that are wrong with the states. Most of the states, because as a point of looking for revenue, they create another law that is different, except Lagos State and Kaduna State that comply with the federal law. And that is one of the issues of this new tax law. We want to clarify. My deferment level is 100 naira in Lagos. But in Ekiti State, in other states, it's more than that.
Sure that
and Ondo State, go to Edo State, and other state, development levy is different. My business premises is 10,000 based on the heart. they formulate another official gazette to increase it to any amount. In Kogi State is 150. In Ilorin is 100,000 for the same individual person that they pay in Lagos. So that those are the thing that in this new law there won't be anything like that in the. Then let me clarify that if you have a tax clearance is automatically free. At the point of in Lagos, I don't need to apply for tax clearance. If you are saying we are going to legalize
issues in practice,
we don't need to in Lagos. When you apply, when you need tax clearance, if I need tax clearance now, I will just put in my pay ID and my password, and will generate my tax for me. If I need my statement of account, issue of what I've been party in Lagos, and they want to renew that property. Before you can renew the property, you need to get the permit in Lagos, and before you can get permits, you need to prove that you are tax compliant. He called me, and he said, do you have it, evidence of tax that you are paying in Oyo State, compliant where you are, and they provide it, and based on that one, is clear. So that the problem that they need to be solved under this new tax law, get a business within 5 days. It means that by the time you start your audit, a tax man does not mean that you are tax compliant. So that they can carry, what they go do is that they can carry the tax audit at any time. But the tax man you need, you will get it for purpose that you need it for. Then another clarification I want to make under the global income. When you are finding your personal income, you need to consider your expense, so that don't make a mistake finding a global income without considering your expense. You are at loss, because the business you are doing, the personal income, you have a certain expense you incur. You don't need the auditor. What you don't need to do, you can write it down. Just write it. This is my global verifiable. Since we are not that, then you can now file it. Because if you file the global income without consider the expense, you are exposing yourself to additional law. Then another clarification I want to make: if you are company, your turnover is exempted from company income tax as 100 million now, but under the filing, there is a clause there that you need. If your filing is supposed to file as 38 June of that year, but you fail to file, automatically, if you not file at July, you have forfeit the exception. They will tax you, even if your turnover is 20 million, you lose the benefit of exception. And that will need to be considered, that you need to be tax compliant. We need to know the time that you're supposed to file. Then another issue that I want to mention is that some people register a complaint, but they don't use it. They have not registered it. Under the law, when you register a complaint with CAC, you're supposed to approach the FRA to register the business, to register it for value added tax within the 6 months. If you don't register that business within the 6 months, maybe after 1 year, you now see someone want to give you business. They now ask you for VAT. You will pay penalty on that VAT, because the law says within 6 months of incorporation, then you must file the VAT. You must get a VAT certificate. And under the VAT certificate, it not say that, oh, you registered a business, but you have not done any business. You expected to notify the government that, oh, I've started the business. I've not started the business, but I've registered a business. You prepare what we call a statement of affairs. That is, every year you will be uploading the statement of affairs, of assets, of any expense you incur, uploading it, so that you won't be penalized. At your tax clearance, based on the statement of affairs you upload, you can get your tax clearance. What you will get is a NIN 00 tax clearance, that you have not started the business. Let me now go to the real question on under the how to minimize our tax exposure. Tax under the law, if you see the old regime, I don't see any reason why you should be scared. The people that are supposed to scare, if you have done it, you have compared the old regime, tax law, and the new one, you will see that there is no material difference. It's just a slight difference. If your turnover in a year is between the rate of 800,000 to 25 million per annum, the old regime is higher than the new one. So that you don't have anything to scare about if your turnover is not to 25 million as a salary earner. Those people that is affected is that if you are not starting getting something around above 30 million, you started having a slight difference, not material difference. Before you can start having a material difference on the on your salary, it means that you are earning above 35 million in a year. So that, and the tax provide under the old law, it provides the consolidated relief. But under this one, it said no, let it 800,000, that is 800,000 per annum. Then plus your rent, that is the rent is part of your relief. There is a eligible allowance and deductible allowance. Under the law, it said that if you are getting plus rent, your rent is not automatic, but you need to, there is a clause relating to rent. If you are staying in the school and they give you the house, you are not paying, but you are enjoying it. What the law says is that what is the market value of that rent you are staying? Then it means that it's part of your benefit in kind. Under the benefit in kind, they add it to your salary. The 20% of that value is taxable. No, 20% of it is what you will relieve from your salary. It means that maybe the house you are staying in a year is 5 million, and you are collecting 10 million. 5 million plus 10 million is part of your income. Then 5% of that 5 million is what they will relieve you. Then if you have a rent, maybe husband and wife, they have rent. They are staying in the same place. The wife cannot tender that document. It's falsification. So that both of you need to agree. Who will use to know who, but they can trace, oh, this document, somebody has traced it, has submitted it, they can cash them. So that if your rent, husband is one that provide it, wife cannot provide it, cannot provide the document. So that we have a lot of relief that you can enjoy. Your pension, you can, like me now, I decided to increase my, even before the tax law, I have a special contribution of that I'm making as a pension. It's exempted from tax. After 2 years, you now decide that you need of money, you tamper it, you have violated the law. Because the law says within the space of 5 years, if we don't touch that, we don't withdraw from that personal income tax, it will be allowed. I say, okay, on the certain amount, and they will compute against your future, that you can, if you are retired. That one also is pay for those people that have their personal house. You can approach your bank, mortgage, to give you a mortgage. The interest on mortgage is exempted from the tax. The money you pay for NSITF is exempted from taxes. So that the best way is that for what we do in our organization is that, oh, if you want to make additional contribution to your pension, which is part of savings, you know, so a lot of you have a cooperative. It's a savings. You can turn it to pension. You can turn it to annuity so that this money, when they deduct it, is automatical. But there is a clause under the mortgage. Don't say because I say it's a mortgage, you go and get the mortgage. It's a clause. The mortgage need to apply. They need to give approval. The state need to give approval before you can allow. What will now happen? Maybe you get the mortgage in January, and they have not approved that mortgage in the beginning of that January. You will continue pay what you expected to pay. If they now approve it in June, it means you have been complied. Whereas it's supposed to pay up to that amount. What you now do, you now reassess yourself. Whatever you have paid as a result of excess for that, then you now relieve it from the month of June. Not that because You saw in the tax law that interest on mortgage, you started relieve yourself. No, they need to collect the name of all the staff that are on mortgage, so that they can now seek for the approval of the state. So that when they seek approval of the state, they will rerun the thing. The employer obligation is to file for the staff. That's the reason why employer is filed as a 31st January every year. It's obligation of employer. Any tax issue on payee of the staff under payment is a responsibility of employer, not the responsibility of the staff, because employer is the one that failed to deduct accurate amount, so that employers should be agree to pay the difference. Then, apart from that one, there are some organizations that they are saying that, oh, is there anything they can do to reduce their tax? Well, in Abuja, just been paying some amount. Then, if they agree with them, if Ekiti State agree, that is but it's not automatic. You need to 100% sure is high, because 32%, that is where MPR is 27 for 5%. Because government will say that, why do you keep my money? And it means that when you are default, in each day, 42% interest rate is accumulating on your default. And that is why that the tax compliance nowadays is, you can't, under the tax law, we're supposed not to have, they amortize the tax. All the development level should be abolished in the state. Okay, before you can get this document, you need to bring your business premises. They need to abolish, because they need to, you see some local government stopping the vehicle, collecting some, giving them tickets. That is part of what this new tax law address. But no government is focused on that area to address all this cheating the government like that. He didn't know that a lot of things have changed. So that what I would show you, the manipulation, it will be very difficult to do, because anything you submit to the tax format, no tax controller can, if they want to help you to reduce your tax liability, another person is in Abuja that will verify that document. What do you do to reduce this tax liability? What the document that supported before you get to this, before it's possible, you can negotiate with tax consultant. Okay, both of you pay 20 to government, pay this to me, and said. But this one will be difficult because it's a document base, it's a record base. IFRS does not need to come to your office, just like a South African and advanced country. IFRS, they don't need to come. Only what you need to check their system, and based on documents you submitted, they can start querying you, telling you what your income is like. That is aspect. Then another clarification for those people that do the business, there is a zero return VAT and there is a exempted VAT. They are not the same. What this new tax law do, they increase the necessity. Education, they had it as a zero tax, like a food, like all this that's necessity. So that it means that despite you are exempted for VAT, you are zero VAT, but your products, there is no way you can do it for other customer without paying VAT. Let me give you an example. Water. The water is exempted for the VAT. But the bucket, you are not the one that produce the bucket. You need to buy it from another company, and it need to add the VAT to it. You don't need to scare. Just pay the VAT. They added to it. Collect your VAT together. You will give it to the FRS. Immediately they put the name there, they see that this person has remit that VAT on your name. The money will be refunded to you. So that, but it's a clause. It's not for individual, because you can go to supermarket, they add VAT to you what you have selling. It's not for individual, cannot enjoy VAT. It's only business that can claim VAT. That's it.
Please celebrate it for me. Thank you so much. Sorry, I'm coming. Please, we are trying to round up this session. Do we still have any questions? Please raise your hand. Let me know how many questions we have. We want to address everything in the next 10 minutes. Mr. Dagunduro, yes. Mr. Okay. Dr. Collins, Mr. Osadoni, who else? Mr. Adekoya, please let the only 4 people. So let the 4 of them ask their questions now. What of the participants? Mr. Olasokami, anybody? Virtual participants, is anybody asking question online? Okay.
Thank you so much. My name is Adeleke Adekoya. I would want a little clarification, particularly with respect to registration. One of the panelists mentioned the fact that there will be a need to get registered for, if you are running a business, for the business, then for yourself as an individual. The clarification I want, because I have somebody who is a little bit mixing it up. I was insisting that from the little knowledge of taxation I have, you don't register a business name for tax because it cannot be taxed. You only tax the owner of the business. Because the person immediately tried to register and they were telling the person that the name, not the person, my wife, they are telling her that her phone number is already existing. So I want a clarification with respect to that. The second issue I want to clarify also has to do with particularly EK on this machine, pay 30,000. The first time it happened, I said on this machine, pay 30,000. The first time it happened, I said it can't be. How much are you making that they'll ask you to pay this amount? I did the maths in my head, and that was what forced me to go to the office. So I just want some little clarification on that. Thank you so much.
Mr. Akindaye, the head of PAYE in the Ekiti State National Revenue Service, will help us handle that question. Mr. Dagunduro, your question, please.
Thank you, sir. My name is Dagunduro Muyiwa. Yeah, my question is that we are not afraid of our paying tax on salaries, but my problem is apart from salary. For instance, let me take myself for a typical example. I have a side hustle that I'm doing. The turnover from that side hustle is, let's say, multiplied by 10 of my salary. Am I going to pay tax? Can I go free from not paying tax? Because before this new tax, I'm not subjected to tax. Now I want to know how I can avoid tax this time around. You get the question, sir.
You want to avoid tax?
Yes.
Okay.
I want to know, as professional, as my consultant, how can I avoid tax? I just need the tips.
Thank you so much, Mr. Dagunduro. Your question is clear, even though it has been answered before you came, but it will be addressed again. Mr. Saloni, your question, please.
No, sir. Prof asked a question, sir.
I'll be asking, yes.
All right.
Dr. Collins.
Thank you so much for this session. Before even coming here, it has been a matter back there in Lagos, the self-filing. Now, why I have several issues regarding this tax matter, I will leave those issues. I just want to ask our panelists this before everybody. Do you think that this new tax reform law still have some defections? As an ethicist and a fraud analyst and expert, I just want you to tell us that this law is flawless. Do you understand? Because the confusion it is causing. A radio station sent me an invite yesterday to come and speak in Lagos, to come and speak on air to address the confusion. Lagos State deadline 14th. They have extended it. And there are still a lot of confusion, especially technical issues. and all of that. You will click forget password to send email OTP to another number that you don't know, another email, and you will chat directly, and nobody is responding to you. And we have works to do. We have other things to do. Look at my colleague going to tax office to go and collect, and he has research to do. He has several works to do. So just tell us here, so that the confusion, online confusion, they say Mr. Taiwo.
In as much as I agree with you that there is nothing is perfect. There must be an today. Not only that, sir. Why you are saying that whether it's defective or not is that the law has bring so many tax practitioners. Even the roadside mechanics has become a tax practitioner now, because they will prove to you what does not exist. And that's why Professor Taiwo always finds himself in a very difficult issue at times. So from my side, the law is perfect, sir. The ICAGSD filings and assessment, the question was being asked from this angle. Unfortunately, the man is not on ground now. Okay, sir. All right, sir. Your question, sir, we have said over and over, sir, that your responsibility as a taxpayer is to declare your income. If you fail to do that, the tax authority, by the end of that 3-month window available to you as individual, the tax authority is obliged to assess you. So you are saying that maybe you have 2 computers, I can use whatever. Yes, the law allows me to use best of judgment, to use whatever is available to me, because you have failed at your own part to tell us this is my income for so year. So, and you can't expect the relevant tax authority to now fold their arms not to carry out their obligation. The number 3 question said you want to avoid tax on additional income. Well, you are telling the people that will tax you not to pay tax. I don't know how to answer that question. Thank you, sir. Let me allow other people to contribute.
Thank you, sir. Okay, let me start from where my colleagues here stop. I believe that the only way to avoid paying tax is not to engage in business, not to engage in any transaction. The moment you have any transaction, you engage in business, there is no way you will pay tax. So to avoid tax, yes.
Now did not say paid online, went to their office, they say I paid online, went to their office, they say I should still pay some money. I now told them, I said, give me receipt. They say, oh God, we know they give receipt here. I said, but I need to reclaim my money back. And then they were ready to delay me. And because I had several other things, I just had to pay. Now,
but that one, sir, is not the fault of the law. It's not law. That's an individual.
I'm just saying that when you now complain about issues and it looks as though the thing is perfect, it frustrates. It frustrates even because tax is not only just to generate revenue for the government, it's also to generate revenue for the government. It's also to help the citizens, to level income, to do several things. But now making the citizens to suffer, to go through pains, to go through a lot.
Towards the end of last year, there was a lot of propagation that, by 2020, by 2023 this will happen. They will be taxing the poor people. People that is no a lot. Even some January, government will kill everybody with tax. Some January, government will kill everybody with tax. But when you look at this new tax law, honestly, it's a relief. It's a relief for the poor people. It's a progressive for the poor people. It's a progressive tax indeed. Even though it's a tale of two directions, as it's widening the tax net, it's relieving the poor people from paying tax, while it's making sure that people that are avoiding the tax before paying tax, they are being coming into paying tax. And that is the purpose of coming into paying tax. And that is the purpose of this tax. This tax is expanding the law by bringing people that are evading the tax before. It's expanding the law by bringing people that are evading the tax before. Like all the House of Representatives, they are the only people that can amend law. And this is law. So that means law. And this is law. So that means as we are having those agitations and all those things, we can compile them probably by those things. We can compile them probably by the end of the year. You know, we have just started now. End of the year of probably early next year. All those things, all these are represented. So thank you. Then the other thing I want to say about the issue of the land use and tenement rates.
We have 4 laws that people normally talk about, but I see that one key law, but in form of regulation. It is called deduction as source withholding tax regulation 2024. It's a key relevant instrument of tax law that we need to make reference to, most especially those in the account and bursary section. You will see the tax rate under withholding tax and the other relevant information that is key. Please let's take note of that regulation, because a lot of us majorly talk about the new tax law of 2025. But that withholding tax deduction as source withholding tax regulation is very key too. We will take note of that. So we also someone talking about filing, that we have some we distribute manual to. What we did in the Ekiti state, and it's a directive, what we have is that we have some informal, the law doesn't exempt anybody from filing. Every taxable person must file. But we now take cognizance of, we have some core informal sectors that they cannot even use the system. They don't even make use of Android phone. So what the system now did for them is that we have what they call simplified annual filing. That simplified annual filing, that was the system. We are not looking at the penalty in the Ekiti State Internal Revenue Service. Not to put anything. What we now do is that we have a simplified annual form that we now design for the core informal sectors that they can give to them, just guide them, file. Even most of those core informal sector, their income might even be exempted from tax due. But if you don't file, there's a penalty for that. So we don't want them to run foul of the law. So that what we now do is that to issue that simplified annual form, but not for everybody. Excuse me. Then somebody talking about salary and side hustle. How do you avoid tax? That is not tax avoidance, it's tax evasion, not other than that. Then for Prof, you talk about filing too. In the law, we have what they call self-assessment. So after carrying out your filing, the annual filing will get your tax due. You can make your payment, which is called self-assessment. That your self-assessment, if you are accepted by tax authority, it becomes final as your tax for that particular relevant year. Then, also talking about the law, there is no perfect system anywhere in the law, anywhere in the world. So, but however, anything that needs to be updated, amended, you will definitely get it through the Finance Act. And the Finance Act made necessary amendment to tax law. And they now have consolidated relief allowance. Then now, now under tax law that gave relief for 800 of your taxable income before other necessary exemption. Thank you.
Just a minute, sir. Mr. Motojo made, he raised an observation that Ekiti State still collect haulage on the road. Please, it's not Ekiti State. If you look at that place, it's Ondo State. That is, yes, it's Ondo State. Between Ondo State, I've forgotten the name of that town. No emblem agent in Ekiti State. That should be along Igbara Odo.
Okay, thank you, everybody. Anything? 1 minute, please. Just 1 minute.
I don't know. The person I actually want to address is no more on the seat. And that should be Mr. Dagunduru. Mr. Dagunduru. I think it's outside. So I think we should just keep whatever we want to discuss about it. I don't know if panel members are allowed to ask questions or seek clarifications where needed. Discovered that tax clearance being issued to employees has a cross on it saying not valid for contracts. Can we get clarification about why is it not valid for contracts? Since that is my income, does it mean that I cannot actually get a contract because I am an employee in a particular place? Okay, the second one should have been on rent, knowing that in Nigeria, virtually everyone owns a house. Virtually everyone is a landlord, be it a room, a duplex, a flat. What will be the treatment of rent for employees, particularly those that owns their house and they are not paying rent to any landlord?
Thank you, sir. On the issue of tax clearance issue to employee that we say not valid for contract, the simple analogy is that the employee, what you only file, the employer file, like for instance now, let's say Abuad, the employer file that you are employee of Abuad. Then now the state government is now using, there's a bid opening that okay, company should bid for tax clearance. Director of that particular company should submit their tax clearance certificate. Then now your only source of income that you claim is employment. So how can you now bid as a director of another company? So let me. Okay, sir.
I just collected my tax clearance. Mr. Akinleye knows about it. And my NIN was actually requested for. They discovered that my name happens to be in a company, as a director, in one company. And they asked me to give evidence of remittances of this company. I said I'm not a signatory, that they just used my name as a director to register. Do you know before they issued that, I provided evidence of remittances of that company. So if I can provide evidence, that means they have routed my NIN through all accounts that I'm attached to, be it I'm a director or not. So why is it still not valid for contract?
The TC that was issued to you was based on deduction from your income from Abuad. Let me understand, from income from Abuad now. So now, if the company that you are a director now, if they are remitting personal income tax on your behalf now, that particular tax payment will be added to your income, so you will not use payee majorly
to do that again. So that might be valid because the additional income has been stated. But in most cases, where we use not valid for contract, is for employee that only declare their place of employment as their principal place of employment. So you are now using the another company to bid for contract. That's just as a director. That's why we are stating that, sir.
In addition, the receipt you submitted, it wasn't your name on it. It was another person's name. So actually, I supposed to reject that because I also asked for the income, for the tax you paid, being part of that company. But we just overlooked that.
And contract is not given to individual, it's given to a registered company. So your own tax clearance as individual, you can't use it for the registered company to get contracts. No, unless you register a company.
That's very clear. Thank you. Thank you. Okay, rent. How can the landlord claim rent relief? Is that not the question? On it. Yes. Yes. It's a matter of law. Dr. Asubiojo, I think we are clear. So thank you, everybody. The head of PE, Ekiti State in Revenue Service, Mr. Kindeye, thank you so much. It has been very engaging and informative. We appreciate you. Dr. John Ibitoye Abiodun from National Revenue Service, we appreciate your contribution to this discourse. It has been very informative. God bless you. Ambassador Obragbemiga Ogunsanya, Oluwasegun Ogunsanya, from both ICAGSD and CITN, thank you so much for coming. We appreciate your contribution. They are very insightful. Our own Deputy Bossa in NABWAD, Dr. Sesan Abayomi Asubiojo, thank you so much for very insightful contributions. And our managing partner, Oluni Yomatoso and Co, Chartered Accountants from Lagos, thank you so much for the practical insights on what we can do to, to reduce our tax exposure. We appreciate you and for that wonderful and insightful comments. So, ladies and gentlemen, this is where we are going to draw the curtain of this particular session on Nigeria tax reform discourse. We appreciate your attention. We appreciate your patience. We appreciate your comments and questions. Professor Yorogba from Bowen, thank you so much. All the tax experts in the house, Dr. Collins, Bishop Dr. Kadewo, he has left. Thank you everybody for your patience. So, I would like everybody to please stand up while our tax expert remains seated and we thank them. Let's sing our founder's song of appreciation to them. 1, 2. Thank you, 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 thank you. Please appreciate them for me. Thank you, everybody. God bless you. Where is Mr. Yodat? Sorry.
So thank you. Dear participants, it is time to return to our technical session. It is time to return to our breakout session to listen to the remaining presenters, virtual and physical. Prof, are you ready? Okay. Please, we have directed many of our presenters to the other session. We've created another session so that we will not. Dr. Ibitoye, we have one of the shares just came in, so we directed. Many of them are not even meant for this section, not to overlabor you. So we only have one physical and two virtual, so making three. So, mi ò gbọ́ bẹ́ẹ̀ ni méjì tí wọ́n submit lẹ́kọ̀ọ́ ẹjọ́ ẹ bá mi sọ pé how many people are ready for presentation ẹ bá wọn ṣáàtì wọn. We have directed many of our. How many of you are ready for virtual presentation? Please signify. Okay, Gundele, you are ready?
Yes, I am ready.
Okay, Ogundele is ready. Yes.
I am ready. Sir.
Share your screen. Share your screen. Share your screen. Let us see your slide. Okay, fún àwọn live stream. Live stream can.
Yeah. Okay.
How many of you are ready for virtual presentation? Please signify.
Can we hear me?
All right, sir. Our technical session